Hello, everyone. Today, my colleague Josh and I will be discussing IRA contributions and special considerations for U.S. expats. So let's begin with some basics. What's an IRA? IRA is an individual retirement account, and it allows you to save money for retirement in a tax-advantaged way. There are two main types of IRAs. We've got traditional and Roth IRAs. The main difference between the two is whether a contribution will be tax deductible or not. In a traditional IRA, a contribution may be tax deductible, and investments grow tax deferred until you withdraw them in retirement. For a Roth IRA, a contribution is never tax deductible. However, the account grows tax-free. And depending on where you live in the future, if you're living outside of the US, you could also potentially take it out tax-free. So in order to contribute, one must have earned income in any country, not necessarily the US. It's important to know what earned income is, and essentially it includes all income from employment, but only if it's includable in gross income. So some examples are wages, salaries, tips, and other employee compensation, as well as self-employment income. A couple things that do not count as earned income are pension income, annuity, interest, and dividend income.
Right, brilliant. Well, thanks for taking the time to have a chat with me about this, Anya, because we know this is something really important for a lot of our clients. This comes up a lot for Americans living abroad. And I guess the main question a lot of them have is just what exactly they need to do, because a lot of them are under the impression that they actually can't make an IRA contribution. But what exactly do you have to do in order to make that happen?
Great question, Josh. So we've actually created a tool that we'll be sharing with the audience today about to make this process easy, because there are a couple steps, a couple of questions we need to answer to make that determination. One of them is your filing status in the US. And so if you're filing your US taxes using tax credit, that's one of the qualifications that you are satisfying to potentially make a contribution. If you're using the FEIE or the foreign earned income exclusion, you're likely not eligible for a contribution to either Roth or a traditional IRA. That's why, that is because if you're excluding all your income on the US side, then the contribution could be disallowed. The exclusion amount on FEIE currently is $112,000. And so if your income exceeds that amount, then you still might be eligible for a contribution. Otherwise, if your income threshold is below $112,000, it's great to check with your accountant to see if switching to tax credit could be advantageous, and at the same time potentially qualify you for a contribution.
And it's worth noting that we're in 2022, right? So for those watching in the future, the amount could be higher, right?
Exactly.
Yeah. Brilliant. Okay. So yeah, a lot of expats are curious about how to make the contribution. But yeah, I guess what's just as important is just taking it on a case-by-case basis, right? Because if you're living in a different country with different tax rules, it can also be, well, different in terms of which kind of IRA strategy makes sense. So like if you take, for example, if somebody's married and they have an annual earned income of, let's say, 80,000, and they're filing jointly on FEIE, what would you say would be the best way for them to go in that case?
Mhm. Yeah, excellent question. So let's actually get into our new tool that we've created for everybody, and let's see how this works. This actually can be quite easy. We just need to go through a couple of decision points on this decision tree. So, Josh, you've mentioned that this person has earned income of about $80,000 per year. So we know the first step here has been satisfied because we do have earned income. So then we go on to the next part, and that is, how are they filing their U.S. taxes? And you've mentioned that this is filing using FEIE, and the annual income level is about 80,000. So we know here right away that they do not qualify to make an IRA or a Roth IRA contribution unless they inquire with their accountant to see if switching to tax credit could be advantageous. So this is kind of where we pause and we wait for an input from a tax accountant in this particular case.
Gotcha. Okay. So it's definitely a conversation you want to have with a tax specialist in that regard. What if, say, so a different case now, somebody is single and they are on the tax credit, making about 100,000 a year and living in the UK. Would that be possible in that case?
Mhm. Yeah, another great example. Let's work through this decision tree and see. So Josh, you mentioned this person has an income, earned income. So again, first step is satisfied. And then you've mentioned also that they're filing using the tax credit. So that's also a green light. So we can move on to the next level. Then you've also mentioned that they are single and they make about 100,000 per year, which means that they could possibly make a full Roth contribution here because they do fit within those guidelines. So pretty easy, pretty straightforward case when one could actually make a Roth IRA contribution. Now, it's also important to point out that the source of this income, this earned income, doesn't have to be the US. This could be a salary that this person has in the UK. So a great example of someone who could actually benefit from a direct Roth IRA contribution.
Okay, brilliant. So good to know. So we'll just try to make it a little bit more complicated now. What if you're single in France with an annual earned income of about 250,000 a year? Can you make a Roth IRA contribution in that case?
Let's see. Possibly. Let's take a look.
Mhm.
So we have earned income. Again, number one is satisfied, easy. As far as the US tax filing method, if you are making over 250K a year or you're well above the foreign income exclusion threshold, then this is actually almost irrelevant because we know you're not excluding all your income in the States. So we're going to move on this part of the decision tree. Then you've mentioned this person is single, but wait a minute, they do exceed the income threshold for a contribution to a Roth IRA directly. And so that's why we would want to consider whether a backdoor Roth IRA could make sense in this particular case, or if they should proceed with a traditional IRA contribution. So my next question for this particular scenario and this case would be whether this person has any balances in an IRA, SEP, or simple IRA within their other accounts. Do we know that?
Let's say, for argument's sake, that they don't.
All right, perfect. If they don't have those balances there, they could possibly make a traditional IRA contribution, which is likely not tax deductible. However, they could, if they don't have balances in those different accounts, they could utilize the backdoor Roth strategy, which is explained in our other webinar. There is a link in this document where you can watch a fun video that we've created as to how a backdoor Roth IRA works. So great example, Josh.
All right, brilliant. Talking a bit about the Roth conversions, is it always worth making such a conversion if you have amounts in a traditional IRA? What do you think?
Actually, not always. So there is a rule that we've explained here, IRS rule called the Pro Rata Rule, meaning that if you're trying to do a backdoor Roth contribution, meaning you're contributing to a traditional IRA and then later turning around to convert it to a Roth, if you have balances across other pre-tax accounts, the IRS has a rule that they will proportionately tax a portion of your existing accounts when you're making the conversion to Roth. So it would depend what your balance is in those different accounts. And it would, again, be a great conversation between you and your accountant as to what the tax liability would be to see if this is still worth it. In general terms, if those balances are quite high and these are all pre-tax, we would say that the backdoor Roth is not likely a great idea, but a traditional IRA might still be a great idea. And according to the current tax code, you can still do a conversion in the future, perhaps when you've got a low income level. So great planning discussions to have with us potentially in the future.
Yeah, okay, definitely. Yeah, so thanks for all that information, Anya. Um, when we talk about retirement for Americans abroad, so in that particular very unique sort of situation, there's some different moving parts as we've seen here today. Um, are there any final thoughts that you think that we should be left with about everything we've gone over here?
Yeah, absolutely. Two thoughts. First one is country specific. I think, we've been using the UK and France, which are easy examples as far as making contributions to Roth IRAs, because currently, when you take a distribution out of a Roth, that is, for example, in France, that's all taxed on the US side. So there's essentially no taxes on the Roth IRA distribution. However, there are countries that will tax Roth distributions. A couple examples would include Germany, Ireland, or Spain. So in those instances, and there are many countries like that. So in those instances, we certainly invite everyone to chat more with us to figure out what strategy would be best. So definitely pay attention to what your tax residence is, what the country of your tax residence is. And I guess a final thought, just very generally, is to remind everybody that every dollar that we save today will get us that much closer to retirement. And we just want to be smart about how we save, and whenever possible, to go ahead and save in the most tax efficient way possible.
Brilliant. Okay. Well, yeah, thanks for your insights and for your time on this, Anya. So thanks for having to sit down and just going through this. I know this will be really helpful for the clients. And yeah, we always look forward to continuing the conversation, either with yourself or with anybody that we speak to about this. But yeah, the other resources we have for IRAs that Anya briefly mentioned are definitely worth going over for those watching this video. But yeah, thanks again and appreciate your time, Anya.
Thank you, Josh.